What's going on, guys? Wanted to hop on here and, show y'all some love because, y'all have been going crazy. We got over 1,000 subs. And if you don't want to listen to this little part, you can go ahead. I think I made another intro because I'm making this part after the fact, but just skip 2 minutes ahead. Go ahead and skip this because it's just me talking. You go ahead and get into the video. But, right, 1,000 subs. Y'all have definitely been going crazy. I really appreciate that. And whether you're young and old, man, I'm 21. And, right, I got the drive to just, man, I'll blow the fucking brick house down, man. We're gonna get this shit life or death. 6 figures or fucking bust, man. Then it's 7 figures or bust. And we're gonna keep fucking getting better. But, right, I started to make a YouTube in the Discord really just to help the people out that, needed help. Obviously, I was in one point a couple years ago where I had no information. I was just young and dumb. Right? I had no clue what I was doing. It's trading support and resistance. Right? And I get my knight in shining armor to come and save me. No homo. Right? And without him, right, I would be probably still where I am. The level he put me on and the quickness and just right, it's not even the quickness that he did it at, right? I put the work in so hard, and man, every single day, man, I was grinding this shit. And I still grind this shit every day. And I put my heart and soul into it, man, and that's really what you need to get better at anything. A sport, I mean just anything, right? And I wanted to show y'all love for seeing that passion, seeing that I want y'all to learn, and y'all putting in that work too. We're going to go ahead and get into the video as soon as we hit TP, right, and really go over the truth behind these SMTs and, right, what I choose as a high probability SMT and why you should stop, using low probability SMTs. What's going on, everybody? Today, we are going to be going over why you need to stop using the SMT. And not necessarily stop using it overall, but just completely stop using it the way you're using it, right? And open your eyes to a different way of it being used and not necessarily using it at every single high or low, right? Because every single SMT you're going to see is not going to be a high probability SMT or one that you're going to want to be able to, hold through and or, right, get an entry in. As you'll see here in this clip, right, we got multiple SMTs to the high, and then I wanted to see acceleration to the high, right? We got an SMT and, right, pulled a stop and went ahead and pulled that stop closed and went ahead and got myself out of the trade. I've adapted my trading over the time and even in this right month that we have gone from this March, right? The executions were quite ugly, in fact, and I can't, sit here and tell a lie about that, right? But with this SMT above these equal highs, right, into right, this obvious FEG, as we can see noted here as well on the ES chart, right, is well above previous day high, right? So that leaves us with, the probable chance that we won't end up running these highs on NQ. Let's go ahead and get deeper into some notes here, get off the charts for a second, and then we'll come back. Coming into the notes, obviously you can read, we're going to be going over the true secret behind the SMT divergence and what really makes it a high probability SMT. With talking about this, you need to know what is an SMT divergence, and it's a smart money technique or smart money tool, right? That is a divergence between assets. This divergence, right, is used to determine relative strength and weaknesses, right, between these assets. Say NQ and ES are correlated assets. If ES makes a lower low while NQ, right, creates a swing low, that is an SMT divergence. Not every SMT divergence is high probability, right? Trader Day himself says there's no reason to take a trade without an SMT present. I personally will take trades without an SMT present, but only if they have the same high time frame narrative going into the low time frame alignment, right? We have usually 3 big key points that we'll go over and keep in mind, right? We're always going to keep in mind that our high probability rejection blocks and order blocks are treated pretty much damn near the exact same as our SMTs. So when we say this, and everything listed below and you can look back in our old videos, right? What makes a high probability order block and rejection block. When you list these things and say them out loud, you can say, oh, right, this needs to form at a key level. So an order block, rejection block, and an SMT need to form at a key level, right? And use that for everything we talk about. So obviously, as we just said, they need to form at a key level. Bullish order blocks will form with a short form low liquidity pool above it, right? And the opposite for bearish order blocks. What does this mean, right? After price sweeps a higher low on a higher time frame range within your time frame alignment and leaves failure swings above or below that swing, it is used as a liquidity target. It is used as a liquidity target after orders are formed inside of our order block. As noted here, right, we sweep this low into our FEG. After we sweep this low, right, we close within our wick here, right, and then, right, form a CSID above the candle, right, and attack this short form liquidity that is above, right, our previous down closure candle's high. First things first, after a high time frame sweep of liquidity and our order block rejection block is created, we can expect that low, our high, to be left behind as the equal lows or highs. Secondly, we can also look out for a low time frame SMT above or below the order block rejection block inside the high time frame SMT, which makes it a more high probability low time frame SMT, right? So we look for a high time frame SMT inside of a low time frame SMT. Same thing with breakers when bullish down close candles, same thing as breakers. When bullish, our down close candles act as roadblocks. When bearish, our up close candles will act as roadblocks. Always keeping in mind our time frame alignment, and it doesn't have to be perfect to this, but right, obviously on a weekly level, we want to look for a daily or 4-hour order block. Daily level, we're going to be looking for a 4 or 1 hour order block. On a 4-hour level, we're going to either be looking for a 1 hour or 15-minute order block. On a 1-hour level, we're going to be looking for a 15 to 5-minute order block, right? And for a 15 to 5-minute, a 1-minute, or even 30-second order block. Our 3 characteristics of a high probability SMT, order block or rejection block, is going to be a liquidity raid, we need an explosive fake market structure shift, and we need it to hit a key level. Right? We're not going to go over a sequential SMT today, but it's pretty much just 2 back-to-back SMTs, and that's right almost the same thing as a high time frame, a low time frame SMT inside of a high time frame, right? But there also can be back-to-back low time frame SMTs. We have our correlated pairs with ES, YM, and NQ, as well as 2 correlated pairs and 1 inversely correlated pair, with EU and GU being correlated and DXY being inversely correlated. What that means is if GU takes a high, DXY should be taking a low. If not, that's considered an inverse SMT. What I'm going to be doing now is coming on the chart and show you the easiest way that you can come on your own chart and find the best high probability SMTs. Right, we're going to first form a high time frame narrative. Obviously, we're bullish, right? Sweeping old lows, right? And returning higher, right? We did sweep this high, but we then accumulated, right? Formed a range and left an open FEG. We have now displaced, right? With a fake market structure shift on a lower time frame to the downside and swept 2, right, failure swings into our 4-hour breaker. We now drop down to the hourly chart to find and see our SMT. And you're going to have to bear with me because I'm going to be dragging it over, right? We see our SMT here, right? And I'm not going to, right, go like this and try and show that every candle is true, right? If you really want to go back, it's Wednesday, March, right, the 27th of 2024, right? You can go back and study if you don't believe me. So now with that SMT, we can go to look and find an even lower time frame SMT. Drop to the 15-minute, right? And we see our first swing low put in here. So we have a narrative following, right, bullish order flow. So we know that we want to look for buys. We come down from our hourly time frame into our 15-minute time frame, and we note that we have a 15-minute order block, right, as well as a 15-minute rejection block, right, that we closed within 50% and reacted higher. Now noting that we also have a lower time frame SMT again with this swing low, right? So now we have a low time frame SMT within a high time frame SMT. So let's go back to the hourly chart and see how this would play out. Obviously, it's hindsight, so we know what's going to happen. You can pretty much see us form our CRT, right? Sweep range low. Same thing we did here into the breaker, right? We then break the high, right? Start to seek and destroy, run the low, run the high. So we can expect the low to be ran again, right? And then we have our move higher, an explosive move higher. All right, we can take note here, coming down from another top-down analysis, right? We're coming into our weekly order block, right? Coming into our monthly breaker here. And as we can note, we have an SMT, right, with ES, right, below this low. As we can see, ES here has not taken a low, right? And we can come over to YM as well and notice that YM has taken this low, right, this candle low. So we're pretty uncorrelated here, leading to a little bit of low probability conditions, right? But with our bullish bias, I wanted to show how it led me to fade some of these lower time frame SMTs. So we come in here and we notice, right, our first swing high we have marked here. We come into the ES chart. We see that we have an SMT, right, to the upside. So why didn't it work? Well, all of our reasons listed, right? We've come in from a high time frame narrative, had everything, right, telling us that we wanted to long, right, from this weekly breaker. And I don't know how many times I've fucking explained us, longing and having a bullish bias down here, right? But here's another reason why, right? We had our low time frame SMTs driving us higher. Do you notice that as well, right? SMT to the downside. Right? Hard to miss that there, right? SMT, lower time frame as well. Come in a bit closer to the hourly chart here. So, right, swing high, faded, right, turtle soup, come back to the order block, right? Why didn't this SMT work? Because all it looks like, accumulation, manipulation, distribution, right? Coming back to the breaker, right? Then delivering us higher. Another failed SMT. Well, what about this one, you say? Right? Just delivers us slower, right? Accumulation, manipulation, distribution, accumulation, manipulation, distribution, right? You can see that even cleaner here, right? With an SMT above this high, right? But ES has been the stronger one, right? It has been stronger taking these highs when when NQ didn't. So it wouldn't make sense that NQ is above this high, right? Just accumulation, manipulation, distribution, right? With the higher time frame, accumulation, manipulation, distribution, right? You can see that accumulation, manipulation, distribution, right? With the weaker asset having the SMT at the high. And you can even notice there that ES then has an SMT at the low that drives us higher. Why are all the bullish SMTs working, but the bearish ones are failing, right? I mean, obviously, we have the answer to that. Right? Just showed it to you. Obviously, we have a high time frame SMT driving us higher. We have hit a key level explosively. We have dug in to a discount of our higher time frame range, and we are now reactive aggressively from it. Right? We even fade another low time frame SMT here, right? By generating more liquidity for NQ to just then sweep this low where we did not have an SMT yet. Right? Or this swing low, right? We just created failure swings. We then use this generated liquidity in the market to explosively displace past, right? Creating another higher time frame SMT that we now have created equal highs at. Do I think we're going to go higher? Yes, plain and simple. All right? And I hope these, these kind of tidbits and small little notes help you understand why, I aim for certain SMTs and let other ones go, and fade certain SMTs and let other ones go. Because it's really easy to get stuck on the 1 minute chart and, see an SMT, right, and start to get scared. As we saw with our Friday SMT, right, with our TGIF setup, we use this, right, SMT to our advantage, coming in to EQ of the daily order block and failing to close above. Right, we then saw that, noticed, right, accumulation, manipulation, distribution, accumulation, manipulation, distribution. How funny. Right? Accumulation, manipulation, distribution, accumulation, manipulation, right inside of the range, distribution, right, but accumulation, manipulation outside of our range, then distributing through our range, right, and sweeping those lovely Asia lows. It's a beautiful target, beautiful trade here Friday, right, and I hope you can see why I use the SMT, right, low time frame, right, against order flow, right, because I gave it a narrative, right. We came into the order block and also had a higher time frame SMT at the high. And here we're going to just pull up the notes one more time just to make sure you didn't miss anything. Obviously, keeping in mind, everything's not wrote down, right? I didn't write down, obviously, how to confirm an SMT, but you should know by now. An order block, rejection block, an SMT is confirmed by a change in state on delivery, as well as SMT pretty much equals expansion, right? If we fill a fair value gap on one asset and have an SMT into the fair value gap on another, obviously that SMT equals a turtle soup. And what does that SMT equal? An expansion from the turtle soup. Right? Obviously, the highs and lows that are high probability, high potential swing points, right? These highs and lows that form at certain times are where you're going to be looking for the SMT. They only occur at certain reversal points, right? And those certain reversal points only occur at certain times. When I say certain times, obviously I'm not going to be a weirdo and be like, just leave it at that, even though I want to, right? Using our 4-hour candle opening and closings, 1-hour candle openings and closings with Forex Factory, our news event drivers in the back of our head. Not much more to go over here. I mean, there is, but, right, if you don't even know the basics and the key points here, and you can't use it, right, precisely and over again, right, even the small little gems aren't going to do much for you. There's not, obviously, that many gems, right, kind of lay out everything for you, right, as much as I can, because there's no real point in gatekeeping a whole bunch of stuff, right. I'll maybe gatekeep one or two things, but, right, I mean, you pretty much have, the whole kitchen worth of food, so, right, how much more does your fat ass need to eat? No, I'm just kidding. But that'll be it for this video. Hope y'all enjoyed, right? See y'all in the next one. Or stay safe this week, right? Obviously, let's manage risk, trade well this week, right? And I'll keep out pumping out these videos. Hope y'all are active in the Discord, and much love to y'all. Appreciate it. Y'all have a good one.